across the globe, get ready for an epic video. When I say epic, I mean epic. Traders, wait until you see what I found on the charts over the last few days. In fact, hosting my OMNI camp for the last 5 days, we spend, 8, 10, 12 hours a day going over charts, and gave me a chance to take a look back at history and at present time. And boy, oh boy, are you going to really like this video. So make sure you're paying attention. The chart segment is going to be smashing. Before we get involved in the video, please know that trading is very risky. Never, ever trade without stops. Put them in first before you ever enter into the position. I don't care if you trade in crypto, stocks, ETFs, commodities, options, you name it. It is risky. Put your stops in first and always use the chart to make your decisions. Traders, this video coming at you. What day is this, by the way? Do you have any clue? Is it Tuesday? Wednesday? Coming at you on a Tuesday night for Trading Wednesday. That would be Feb 7th, 2023. What's in this video is very interesting, and I'm going to point to the board right now, and I'm going to say this. The title of this video is "This is How Bottoms Are Born," and I'm going to show that to you in just a few moments in this video. Do not fall in love with the upside will be removed after this video is over. Now, of course, it can always come back, right? Markets dynamically change. But what I found in this video and what I'm about to show you tells me it is time to remove. Do not fall in love with the upside from my board. Bond traders, T-bond traders, keep an eye on this chart I'm about to show you. Really interesting spot. So what I'll do is I'll get rid of the bond chart first so that we can then go into the charts of U.S. indices. And I am telling you right now, kids, this is how bottoms are born. Pay attention. So, in a video, I don't know how many years ago, I'm not doing math, but in 2008, somewhere in 2008, I was doing videos, and in those videos, I had done a video which was epic at the time, and it was called "The Market Has Dandruff." Does anybody remember that? I called the top in the stock market, in the OMNI S&P, and we cracked from 1576 all the way down to 666, the 2008-9 crash. The video I did was titled, "The Market Has Dandruff." Well, I am telling you right now, the opposite is this video. This is how bottoms are formed, but it's got a lot to do with the head and shoulders. The market has dandruff, right? So I wanted to show you what that means. I will bring this into focus for you. I promise you will understand it. In fact, just to get you up to speed with where I'm at and where I'm going, I would like for you to take a quick clip of the video I did back in 2008. It's only a minute. Watch what happened. Watch what the charts say there. And then I'm going to come back to you and show you what the charts say today. And I promise you are going to be amazed because it amazed me. I promise it's going to amaze you. Traders, if you don't mind, watch this quick clip because it's worth watching. Then when I come back, I will show you why everything is on this board. And then remember this afterwards because anything can happen and markets don't have to do what the charts say they're going to do. So remember to say this to yourselves over and over again when you're in trades. And by now you should know what that is. Stops are in. Emotions are out. Rock and roll traders, pay attention to this clip.
All right, traders, this is the Dow Jones Industrials cash market. Look at this. This is a very intricate chart. You have a shoulder, a head, and a shoulder, and the market broke down. It came back up. It put in a shoulder, a head, and a shoulder, and the market broke down. Comes back up again, puts in a shoulder, a head, and another shoulder. And now we're about to come down below the 200-day average coming out of that shoulder. But more interesting than that, the whole thing is a massive head and shoulders. Look at this. you have the whole thing right here. It is huge. It is a Head and Shoulders with 3 sets of Head and Shoulders within it. That is very bearish, traders. I am telling you now, the likelihood of this market breaking is very high if you're a technician and you're basing it on this formation.
Traders, did you see that clip? I promise you that was the absolute perfect call. The markets came tumbling down, and now I've got another fantastic call that looks very much like the call you just looked at in that quick clip. And if you'll appreciate these charts, which I'm sure you will, come join me. With no further ado, let's go look at some charts. Traders, 30-year T-bonds, let's get that out of the way first. If you are a bond trader, and I know there aren't as many traders in bonds as there used to be before 2008, right? Last 12 years, nobody really wants to touch bonds. But if you are a bond trader, look at where we're at. We're at one of those do or die spots right here. It held last time. It was created here, but it is below the average, right? So bond traders, keep an eye on this chart. If it breaks further from here, interest rates continue higher and bonds continue lower. If it holds here, well, then we get this, which is what we've had for a while, where interest rates just stop trickling up like they were, right? So, hey, what that means when bonds go up, futures, interest rates go down. And of course, when bond futures go down, interest rates go up. So right here, quagmire. If it falls through, you know what that means, okay? Now let's get the bonds out of the way because I want to show you something really interesting. Traders, E-mini S&P. The top came in right at the beginning of the year in 2022, and we've had quite the drop since. Right? The whole chart's not even here. I can't fit it all on one. We've had quite the drop since the highs were set in E-mini S&P. And the way I look at it, this is also how bottoms are born, if you ask me. Now watch. What do I mean by that? Let's go out to the weekly. First, we'll go there. Traders, on the weekly, you could not get the S&P on the weekly bar chart above this resistance. It just kept trying, but then it hits the 200 bar moving average and holds on a weekly chart and kept trying and finally gets above. And now look, 3-4 weeks above that resistance. Great breach of resistance. That helps us wonder what's going on. Look at the NASDAQ on the weekly chart, right? The NASDAQ, even during COVID, did not break the 200 bar moving average. In fact, the only time it ever broke it was briefly during 2008. Barring that, you can go for years on end without seeing a breach of the 200 bar moving average by the NASDAQ. Then we had our little breach here, if you remember, which was very odd, but look at now. Forget that. Way above, out of the channel, above the channel, above the 200. Fantastic look on the weekly. Now we're going to go back to dailies. This is the daily S&P, E-mini S&P. You know what else this is? One of the very same charts that were in that video you just seen the clip of. This was back in 2008, all-time high, 1576. Oscar came out going, oh my God, Head and Shoulders and another Head and Shoulders and another Head and Shoulders and another one. Then there's another one. And the whole thing is a big Head and Shoulders. Remember that? You just seen that clip? And that was literally when I called the top in 2008. Well, actually, I called it in 2007 into 2008. So let's go back to today. This is the exact same chart, except for now it's today's E-mini S&P chart, leading right up to the moment. And it might look confusing. I'm going to break it down for you. But the whole damn thing is one big Head and Shoulders. And then you got a little Head and Shoulders in the middle of that. And a bigger one and all these little ones. And lots of Head and Shoulders tell you that you're either at the top or bottom of a market, right? So, again, same chart. Let's break it down for you. During OMNI camp, I'm going all the way back to 2008, and I see some of those old charts, and then I come back to today, 2023, and I said, whoa, hold on a moment. Head and Shoulders leading into another one, then another one, then another one, and here's another one, and another one, and another, and another. Let's do a little more research. So I started drawing more and doing more research. I started to fill all that in, and I went, okay, that is absolutely a baby Head and Shoulders leading into another, and then another, and then another, and another. All right, so now we've got a series of Head and Shoulders, both upright and inverted, all over the chart. Very, very same chart, no difference at all. When you look closer, you realize that within although you have all these little baby sets of Head and Shoulders, there's bigger ones here, right? So there's Head and Shoulders inside of the head, the shoulder. So what does that mean? That means Head and Shoulders within Head and Shoulders within Head and Shoulders within Head and Shoulders. Insanity, right? Well, let's look at this again. Now it's that same chart, but now I just keep showing you how not only do you have the little blue Head and Shoulders, but you've got the bigger red ones. Above that, you got the bigger greens on the outside. I mean, look at all these Head and Shoulders. Kids, I am the guy who called the top using this technique. Remember, I am telling you now that this is very, very likely the bottom that we're watching being constructed as I circle all of this in. So now you got a big Head and Shoulders, some very little ones inside the big ones, right? Another one, little ones inside the bigger ones. But then look at this. The whole damn thing is a huge inverted Head and Shoulders. And just above the 200 ball moving average, which is there. That is almost exactly opposite of what I showed you for 2008. That is how bottoms are born. The bottom is in. Yes, we could come down and mess around, but that is it, kids. The bottom is in unless this formation somehow changes and morphs into something different over the next few months. The bottom is in. Do not fall in love with the upside. Has been removed off my board, and I think we are safe buying big dips leading into the future. I hope that helps. I know it's absolute unless something changes. This is as right as it was in 2008. Good luck out there, traders. Please pay attention to this. Do your own analysis, and I will see you all at livewithoscar.com.